Good evening, traders. Testing 1 2 1 2. Time is 6:41 p.m. South African time. I trust you can hear me. I think we should start. Time is not on our side. I don't know where everybody is. Just confirm if you can hear me.
Yeah, I can hear you.
Thank you. Thank you. How's everybody?
Yeah, fine. You're managing.
Yeah. We good. Iran is showing us flames.
Exactly.
Geopolitical event is killing the dollar. The dollar is so strong.
Exactly. I'm glad that you've made mention of that. Right?
Yeah.
We've got those geopolitical events. Iran has joined now this war. Who was the war between initially?
Israel and Hamas.
Exactly. Israel and Hamas. We all know there's been a superpower in the background supporting this.
Yeah.
Supporting.
Yeah.
Who's that?
US, the big brother US.
Exactly. The US, right? It seems like the whole world has just been sitting around in the background, not doing anything about it, just having a talk show, right? Now, Iran has joined it. Iran has joined it, and they've launched over 150 missiles into Lebanon. I'm not too sure how many have actually hit the target, but that's a substantial number of missiles, and it's got everybody on edge. Because the big question is, will this superpower known as the US, will it actually now flex their muscle? Will they actually join in? Right? So everybody's on edge. This is likely to keep gold prices elevated. Definitely, we are risk off. We are taking cover, running to safe haven currencies, and one of them being the dollar, as we spoke about it yesterday. So dollar strength coming about because of that geopolitical event, but not only that, maybe.
Yeah.
What else has contributed to dollar strength today?
The news, what is it called?
ADP.
The news today. You were positive. What is it called?
ADP. I know we had ADP. What's today? Wednesday. ADP. ADP.
Yes, today.
That too came out good. That number was good. Let's go to trading economics for it. Calendar. What should I say? Homepage. Now, of course, the chances of what you call the US, sending actual troops are very slim for various reasons. And I think the biggest reason out of all of them, besides the cost, and of course, a growing, or the growing lack of support from the US citizens funding this war. The biggest reason would be they know that if they join, somebody else is going to join. Likely two other people are going to join, or let's say two other countries will join in. Who would those two countries be? If the US decides to physically be involved in this war, who else is likely to join in and say, okay?
I think Iraq.
Yeah, but there's a bigger power than that. Who matches the US?
Russia. I'm thinking
Yes,
Russia.
I said Iraq.
Russia and China. They all have a bone to pick with the US, right? And we know that Iran has been doing good business with China, so they definitely have their support. And China and Russia are not exactly enemies, and Iran, so they would definitely join in this war as well. So that essentially makes it a World War III. Things
Yeah.
will likely get out of hand. So the US knows very well. So all they can do is, I guess, flex and show their teeth for now, but I don't see it going that far. Well, I hope it doesn't, because there goes there goes peace in this entire world, right?
Yeah.
Yeah, there goes peace in this entire world. So let's see. US private employment tops estimates. That's our ADP, about 134,000 workers to the payroll in September, the most in 3 months, they say, following an upwardly revised 103 in August, and well above forecast of 120. So that was met definitely with a positive reaction. So these two events, one which was scheduled, of course, which is the ADP, and one which is a geopolitical event, have definitely propped up the value of the dollar against its competitors, if I can put it that way. We can see in the last couple of months, in fact, 1, 2, 3, yeah, I guess 3 months, because the May and June were pretty much the same. But we've been in a downward uh, trend on jobs created, and there it is this month now. We are back up, right?
I
Any
have
question?
a question.
Yeah.
Yes. I was wondering if US was able to add 143
I'm
thousand
struggling to hear
workers.
you there. Maybe just try and speak up
Can you hear me?
slightly
Hello?
better.
Hello?
Yeah,
Is it okay?
I think so. I think so.
Okay, sure. So I was saying that if if employment is going up, won't
Yeah.
it rather have a positive effect on stocks instead
Yeah.
of US?
Mm. Would it have a positive effect on stocks? Yeah. Under normal market conditions, yes, this does have a positive effect on stocks. And this is where sometimes the confusion comes in with a lot of retail traders, because they expect that when the dollar is pushing up, then surely stocks go down. No, these two can go up, right? As we react to that data, these two can definitely go up, right? It's just that knee-jerk reaction that you will definitely observe. The dollar and stocks would go up. However, I don't think that was the case today. Let's just double check. Because we've got so many moving parts, we've got a lot of things happening, especially this geopolitical event, this war. It initially said earlier, risk off. Let's just check with okay, so then we rebounded. This was what, 5 o'clock. That's now with all the news in, right? This is just a technical move, if anything. Does that make sense?
Yeah. Yeah.
Remember yesterday our testing, or we will test this support. We're likely you're going to find anybody who sold here. Correction, that was a corrective buy. This is a Fibonacci golden ratio before seeing that sell continue. So previous level of support, role reversal. Role reversal, what was previously support is now resistance. That's what we're basically testing. And we can see in this hour, we definitely do have those bears in there to the downside. Does that make sense?
Yeah.
Let me just make sure everybody's in. Any other question? Okay. Now, another tool that's going to help you measure this risk on and risk off sentiment, to measure that sentiment,
Volatility.
is the volatility index. So this has got an inverse correlation with the stock market, specifically the US stock market, Nasdaq, Dow Jones, S&P 500. So when this goes up, that indicates fear in the market. And if this is going up, then the stock market is going down. Right? So you can, or rather, let me not say you can, you should be looking at the dollar index, right? And the VIX to gauge that sentiment. Any question?
So when it's going down the VIX, that means the fear is managed.
The fear is?
When it's managed, it's moderate.
Yes, 100%.
Yeah.
So when it's going down, we definitely willing to take on risk. There's less. Let's what I'm talking about here. So let's see from say September. Yeah, start of the September. Let's say end of September. Let's remove these drawings. Fine. So let's say for most of September. So technically we should be risk on. So all we do is let's go compare now. The month of being. There it is. Is it making more sense now?
So can you summarize what you're saying, Level? When the fear is it's moderate, the stock goes up.
Exactly.
And then what happens to the dollar?
Right. So on the dollar, the same or very similar picture compared to your VIX. We're going down overall. Hey man, let me just try to move these things off my screen. Oh, shucks. What did I do? Give me a sec. Okay. No, not quite. Bear with me. Just trying to move this Zoom dashboard out the way here. If I can figure it out. How do I minimize this thing? Okay. I guess I'll have to work with it. I'll just keep on moving it around. Let's see. What is the date here? Let me move the screen this way rather. 12th September. Let's look for the start of September. Run about there. I'll mark it out with the vertical line. So bearish. Should be.
Then I just want to
Okay. Voice problem.
You can't hear me, Level? No.
Aside then, because I can't hear anybody clearly. Ready now?
Can you hear me now?
Loud and clear now. It's back.
Okay. No, what I was saying, I just need to confirm. These things can be quite confusing. When there's fear, like a geopolitical event, my understanding is that you're saying the dollar then becomes strong because it's a safe haven currency.
Yes.
Is that not?
That's right.
Now I'm trying to understand now, but you're also saying VIX indicates what I'm trying to understand the relationship between VIX and the dollar index. Because I thought you were saying it indicates that when it's going down, it indicates when it's going up, it's indicating that there's fear.
This is the
So
VIX,
it goes
right?
opposite. This is the VIX. So it goes the same way as the dollar.
Yes. Right. So let's look at this one more time. Right. So we've got the dollar for the month of September.
Yeah.
Guys. Right. Overall, the month of September, bearish for the dollar. Let's go look at VIX. I think, yeah, something wrong with my network, maybe. It's just decided to be slow. The month of September, VIX. Let's try to do this. Yeah, there we go.
Okay.
Right? Moving in the same direction. Right. Dollar and VIX. Okay. So the dollar and VIX, in most cases, they're going to move in the same direction. They're positively correlated.
Okay.
All right. They are positively correlated. And then the US stock market is inversely correlated to these two, the VIX and the dollar index.
Okay.
Remember when we speak about the dollar index or the dollar, We're essentially talking also about bonds, US Treasury bonds. Okay. Now, whenever we invest in the stock market, it doesn't necessarily mean that we disinvest completely from the bond market. The only difference here is the ratio of investment, the allocation, right? If we are risk on, it doesn't necessarily mean we're selling off all our bonds. No, that's just not how it works. You will always have an allocation as an investor in your portfolio. You're always going to have bonds in your allocation, right? Or rather say in your portfolio. Now, the only difference is when you're risk on, when you're willing to take on risk, you are, let's say, 70-30 split, 70% invested in the stock market and 30% in the bonds, or however you want to play it. It all depends on your risk appetite, of course. It could be 80% invested in the stock market and only 20% in the bonds market. Is that clear?
Yeah.
100%, 100%. So yeah, these tend to be inversely correlated, right? But you will find times in the market, especially with when we engage this data that's been released, let's say today, you do find, I've seen it a couple of times, where the dollar and the stock market will move in the same direction. Now, that correlation is not going to go on forever. Eventually, the dust settles and we find the correlation. In other words, what I'm saying is, of course, as an investor, somebody who's looking at that economy, or as a trader, when I see positive economic data coming out of the US, does that not make me more does that not build my appetite for risk to invest even more into the stock market? Because the stock market is a reflection of the US economy. Are you hearing what I'm saying?
Yeah.
So why would I want to disinvest out of the stock market when there's good data? You follow? Guys, I don't want to lose you.
Yeah.
I need your engagement. Give me an aha. Oh, I'm confused. Something. So I know we're on the same page.
Yeah.
So, on the same page, either.
Sitle? Sitle?
Mr. Lebuse, I'm with you.
You're with me. Are you understanding? Because now I'm calling those ones who are at the back of the class now. Yeah, no, I must call. Yeah, there's some who are hiding behind other learners there. I'm bringing you to the front now. No, thank you. As long as you're understanding, right? So, ladies and gents, of course, if the data is good, I want to invest more into that, into the stock market, right? I want to invest more. And there are those, remember I said, it all depends on what type of investor you are. Some will say, oh, this is fantastic. It's fantastic for who? It's fantastic for the US economy. So they'll say, okay, you know what? I don't have that type of risk appetite. So I'm not going to invest in the stock market. I'll just invest in the bonds. The economy seems stable. Let me give my money to the government. Let them do what they need to do with my money. And so these two then move in tandem for a period of maybe an hour or 2 or 3, maybe a day, maybe 2 days. Hard to say. But then when the dust settles and all market participants have engaged this data, have digested it, have understood it, we start to see a shift, right? We start to see a shift. And usually the shift is you will see most of the time the stock market will be the preferred one. Why? Because of course it yields more. Is this making sense?
Yeah.
Oh, yes, yes.
Thank you. Thank you. Thank you. So, yeah, we've got those geopolitical events and we've got that economic data for the day pushing the dollar up. Now, I want us to look at the dollar index and see where exactly is it going? Where exactly is it going? And by the way, now, there might be a preference for the dollar, not only because of the geopolitical events, but because of also we've just entered into a new quarter, and the last quarter, by the way, of the year. Now, every start of the quarter, we does anybody know what earnings reports are? So all those right? All those companies who are listed need to give us their results.
Yes.
Right?
Yeah,
For the
results.
previous quarter. How did they perform? Investors want to know if this is worth holding on to, investing more, or consolidating some of these investments. Will it come out disappointing? Will it come out surprisingly good? That's what we all want to know. And so while we wait in anticipation for this report or these reports from Google, Microsoft, Tesla, etc., why would you want to add more to your investment? You need hard facts. So you hold on to what you have. Some start to hear maybe rumors that, hey, it's not going to look so good. And so maybe they might even start selling off. Right? Are you seeing what I'm telling you? And so, of course, when the reports come out and broadly speaking, they are good, what happens to the stock market? What happens to the stock indices that we trade as retail traders? NASDAQ, Dow Jones, S&P 500. Anybody? If they come out good, how do we engage that data on our charts?
We buy.
We buy.
It gets stronger.
Exactly. It gets stronger. We have every incentive to do so, to be risk on, to buy more. Okay. So you're not going to find those earnings on Forex Factory, which is loved by a lot of traders. You're going to find it here, Trading Economics. Trading Economics, calendar. Click on it. Then category, earnings. Then you'll get to see what's scheduled. Which company is scheduled for when. Right? See, today we got Nike. You want to know where Nike is? I don't know where Nike is actually. No, it's a big company, but really, yeah. These are not yeah, sure, it's a big brand. It's known globally, right? But it doesn't make up a big chunk of the index. And I'm not too sure if where they would fall on the NASDAQ. That's a tech-heavy stock. Would it be on the Dow Jones? That's more industrial. S&P 500, hard to say. Great. By the way, I think we should all understand that, of course, NASDAQ, top 100 companies, right? Dow Jones, top 30. S&P 500, it's actually technically a little over 500 companies, but that's what it is, right? It's trailing the performance of the top 500 companies in the US. There was a question also, I don't know if I've addressed it here. The question that I was asked, no, I don't think it was this class here. I was asked, why does the stock market over time continue to yield returns? Why does the stock market over time continue to yield returns. Let's go to the weekly. This thing is really bothering me. Okay, I'm gonna stop my sharing and I'm gonna try again because there's something here that I just can't get off my screen. Let me just stop sharing for a second. Then go back. Bear with me, it won't take too long. Why does the stock market over time yield returns? Remember at the start I said you shouldn't only just focus your energies on trading, but you should also have definitely an investment portfolio of some sort, right? So I want to show you what happens with these indexes. Turn to meeting, share. Okay. Hopefully this time it's going to be all right. This thing's still there. Oh, it's gone. Okay, there we go. So let's look at the monthly time frame. Let's go as far back as we can on this one. 2018 is not good enough. 2018 is not good enough. Let's try different broker for the same index. Still not good enough for me. Okay, let's look at this. But anyway, for the sake of time, so we can go on this particular one. We can go back as far as 2015. And you can see from 2015, I mean, it's yielded returns. Now, this is the normal performance that we are used to. See how these candlesticks are quite modest and small in size? Right? Then they start to get bigger. Why? Think about it. Come back to it. But the reason why the stock market, or let's not say year by year, but over a long period of time, you know, continues to yield good returns, it is because they do what we call rebalancing. Just like you would rebalance your investment portfolio. The index does the same thing with those companies that are listed. Okay, so what they do is, if your company is listed there, they've got a criteria for keeping you there, for keeping you listed. So if you do bad over a stipulated period of time, you are going to go under review, and then likely you're going to be removed from the index. Are you following? Is this making any sense?
Yes.
Yes.
Yeah.
Right?
Yes.
Okay, so basically, these indexes then will always have the best performing companies listed.
Okay.
So what I'm telling you is, maybe you should be investing in them.
But how, Level? How do we do that? How do I how do I hold Microsoft shares? Can I?
No,
Yeah.
I don't want you to go
How?
that way, right? You can, that's fine. You can buy an individual stock, but when you do so, the risk exposure becomes greater.
Okay.
But when you're buying a basket of companies, they're not all going to do bad at the same time.
Yeah.
Right? So we're buying a fruit basket here. Right? We've got the apples, we've got the oranges, we've got the grapes, we've got the pawpaw, we've got the you're seeing it. Yeah. Right? If I don't like the pawpaw, well, at least I didn't just buy the pawpaw at the shop. I've got grapes here. I'm sharp at the grapes. I've got an apple or two, I've got an orange, right? So it's not always going to be bad. So that's what an index is. Your Nasdaq, that's what it is. You're not just investing in one particular stock. You're basically buying a basket. In this basket, whenever something goes bad in the basket, we quickly remove it and replace it with something. You see it? Okay.
Yeah.
So that is something that you can invest in. Now, how to go about it? There are various ways to do it. Remember, I'm not a financial advisor, guys. I'm
Yeah.
media coach. So the homework needs to be done. So I don't end up in hot water. But was it almost? No, no, no. I'm pointing you in the right direction. That's all I'm doing. Pointing you in the right direction. What you don't know doesn't exist. Now that you know, you can make an informed decision. So start doing that research. You can call your bank and say, hey, listen, I want to invest in this particular index. Help me out. In most cases, they're more than willing to do so. Right?
Can the banks?
Yeah. Your bank can definitely help you with that information. And in most cases, your bank can actually do it on your behalf, open an investment portfolio for you.
Okay, that's helpful.
Hmm.
Because for gold, I know a company where I'm buying gold to them, but they
Yeah.
have they're holding they are a big Malaysian company
Yes. Yes.
that's listed. So
Right?
that I understand, but now I didn't know about this one. So we can
Yes.
talk to our
Yeah, definitely. Get it on there. If it's something that interests you, definitely get it on there. Right? And likely with your gold investment, it's CFD, right? So it's a cash for different investment. You don't have physical um possession of this gold, am I right?
No, I don't have physical. Yeah, no,
Right.
I
And
don't.
in most cases, they do give you that option and say, hey, that they maybe if you want physical possession of it, yeah, sure, we can make it available.
Yeah, they,
Those,
yeah,
yeah,
they can.
yeah,
Yeah, they
yeah,
can deliver gold if you
exactly.
want the.
Yeah,
Yeah.
that's fantastic because you don't want to keep it in the house. Ooh.
Extortionists will arrive.
Yeah, yeah, yeah. Not in our country. Keep physical gold. Yeah, I know you're asking for trouble, right? You're asking for big, big trouble. But
Yeah.
you like to time and again touch it, smell it, feed it, go put it in a safety deposit box with your bank. Most banks have got a safety deposit I think for you, and it's really not expensive at all. I have one. When I kick the bucket, they know it to get my last will and testament and my precious possessions in it. You know, it's. I think people think it's something that is far fetched. They only see it in the movies. Now these things are very much doable. It's not expensive at all, right? So do so as well. But gold, yeah, if you can avoid physical possession, definitely avoid it, right? So I think now we understand why these indexes over time tend to yield positive returns, right? Now, the question that I had asked, and I said I'll come back to think about it, is why all of a sudden these candlesticks get longer? Why?
Yeah.
Okay.
Idea. No idea.
No idea. Something fundamental happened there, right? And it's got to do with
2020 there was COVID, but was that the reason? I'm not sure.
yes, definitely. 2020, we got into COVID and the monetary policy had to change, right?
Okay.
And something happened. So we'll discuss it. Somebody asked me about something that I deliberately omitted as a monetary policy tool. And that one that I deliberately omitted is the cost of this, right? I will talk about it. What I want to find out is, did we go over the 2019 FOMC statements. Was the homework done? Be honest.
Not yet.
Like I
On
always
my
say to my
side.
kids, I can see through you. It always works, eh? And then they just, okay, no, but you know what that, yeah. I always tell them I'm closer to God. The older you get closer to God. So, yeah, I suspect most of us didn't do it. Or am I wrong? How many of us went through those 12 reports? See?
I actually went through it until I think September.
Until September.
Because we already did look at the December.
Number one, yeah. Okay.
I went through it in September.
Okay. All right. So I'm not going to touch on that then, right? I need you to really do it, right? Give yourself time, go over those things. I mean, I just went over them within an hour before the start of the session because I was like, oh, shucks, I gave them homework, but I actually didn't check. So I went quickly through them. Doesn't take long, right? So do so. And then we have to read.
Yeah, but there's something I noticed.
Uh-huh.
The way they tabulate the interest rate cuts in the reports seems somewhat vague.
Vague. No, it's always a range. That's what's confusing.
Exactly, because when I compare with the actual rate cuts they had, I saw there was some
Even the
disparity.
same. I know exactly what you're saying, right? I know exactly what you mean. It used to confuse me because I'm thinking, what is the actual rate? Right? What is the rate?
Exactly.
Right? So no, it's and there's nothing new actually. It's just that we have to understand it that it's a range, right? They'll always say we've cut it by X amount, so now it's actually ranging between this point and this point, right?
Exactly.
For example, the rates were how can I put it? How can I put it? Okay, let me say the rates were between 4.75 and 5.5, right? So they say we're cutting it by 50 basis points, and now it will range between I need to check honestly because this is now such a lousy example because I don't have the hard facts with me. But let's say it will range between 4% now and what? 5? Yeah, let's say and 5%. So it's always a range, right? When they cut, they're working with a range. Much like when they are targeting their inflation, they say it's 2 that we want, but they know they're not going to let 2. It's always a range that it's going to be in. And I'll show you exactly the range that they prefer because they always make it, they always make us aware of the range that they want to be ideally in, right? So not to worry. If anything, then, because I want to give you time to go over those things. Let's talk about, I think it was you, Mr. Bruno, who asked me yesterday that we've got NFP coming up and then today's Wednesday in 2 days' time. How is it going to play out? Well, like I said, there's no crystal ball, but we can preempt the move. We can front run the move. And it's a pity that I didn't get a chance to go over it yesterday. I think interest rates and inflation was a little too deep for most. So I ended up just not even going as far as that NFP data. Let's go to the calendar. So yesterday, data coming out, right? We've got employment data coming out this week, right? And it usually will start on a Tuesday. So let's look at the calendar and see what we got yesterday and what we got today and what we're getting tomorrow and how and what that data tells us, right? Monday, nothing. Monday, nothing. We had Jerome Powell speak on what you call this on Monday. However, I did listen to that on like two x speed, but he really wasn't saying much. He didn't say anything out of the ordinary. It was pretty much cut and paste from all his speeches. So I don't think that had any major impact on the charts. Following day, yeah, sure, we have this data here. We have ISM Manufacturing, okay, and we've got jobs opening. Now, many think, that they don't really go deep into this one, and I want us to do so, okay? But let's start with the jobs opening, which is equally important. By the way, for those who haven't traded news before, there are various economic calendars out there available, right? This one tends to be the go-to one for a lot of retail traders because the user interface is very easy to navigate. It's not too intimidating, and it's color-coded. So red, high impact; yellow, low impact; orange, medium impact, and then you'll find silver as well, which is usually a bank holiday or public holiday, right? So we've got this one, which is high impact jobs opening, right? It moved from 7.71 to 8.4 million. So there was definitely a rebound. These are jobs opening. These are the amount of jobs available in the private sector. Right? So quite a lot of jobs available. But these figures, I don't always trust them. Right? Because I know for a fact, sometimes we test the waters as employers. So we say there are jobs opening, but we want to test. There's not really any openings available. You follow? But we'll go with it. So apparently, there are 8 million jobs created. Well, I guess created. There's job opportunities out there. Now, everything needs to be in context. We need to see over month, how has it been looking, and it will paint a better picture for us. Now, when you see this little arrow here, always know that it has been revised. You see when I put my mouse on it, my mouse, it says revised. So it was initially 7.67. 7.67. So it was revised up to 7.71. So basically, these economists that put this data together, sometimes they'll say, a week later or two, don't know why they don't give us the official number, which is correct, but they'll come back and say, actually, you know what? We got it wrong. Basically, that's what they're telling us. We got it wrong. It's actually higher or it's actually less. Okay, so this one has been revised up from 7.6 to 7.71. Now, we can look at this graph here, but it's not the best personally for me. But we can see since 2022, we peaked in terms of jobs being created and starts to come down over time. There is a reason, right? And it's got to do with monetary policy as well. Interest rates were low from this point, 2020, and up until 2022. In 2022, they started hiking interest rates, right? they started hiking interest rates, moving them from near zero to 5.5%. And remember what we said, when you hike interest rates, you're slowing down the economy. Are we all on the same page?
Yes, right.
Like, so this is a true reflection of that monetary working its way through the economy. Right? We can definitely see it work through the economy. The economy is slowing down. If it wasn't slowing down, then to rise. So that is a good example of monetary policy working, having the desired effects that they wanted to have. High interest rates, you slow down the economy. Less and less jobs have been created over time. But we can see this is last month, this bar here, September, right? What did they say? 7.6, I think. And now this month is slightly higher. So like I said, for me, this one is a little too, I don't know, messy if this is the right word, but economic data that you look for with much more detail, actually. You'll find here, trading economics. So that is JOLTS. JOLTS, jobs opening. Let's see if we can find opening. See if we can find a better graph for that one. JOLTS. Okay, why can't I find it? Let's say US. That is weird. Okay. Do not despair. You can do it this way. So what you do is you go to the calendar and you go find the data, click on it, and then you'll find the graph. So this was Tuesday. Tuesday, JOLTS, where are you? JOLTS jobs opening. I don't want JOLTS job quits. No, that's not the one we want. This is the one that we want. So you see, you get a whole lot more data that you wouldn't find ordinarily on Forex Factory. There's a whole lot more. You wouldn't find JOLTS job quits on Forex Factory. JOLTS jobs opening. Let's see that. This graph will likely be better. And what I like about this one is they really break it down and tell you which industries have created those jobs, right? Here we go. They say the number of jobs opening increased in construction. They added 138,000. In state and local government, so sorry, my correction there. Earlier said just private jobs. In state and local government, excluding education, 78,000 jobs created. Jobs opening decreased in other services, though. In other services, 93,000. Regarding regional distribution, jobs opening went up in the northeast, and it breaks it down pretty much, right? If you want to, if you're interested in such data. So here we go. We can see it has been, this is a much cleaner one. We can see definitely it has rebounded. So that was the first data set that we got on Tuesday. JOLTS jobs opening. All right. Let's go back to this one here. Now, how would you react to that data, of course, on the chart? What do you do to the dollar? You want to buy. You want to,
Yeah, you're back to the
right? You want to buy GBP USD. I don't know if that's what you're looking at. You want to sell.
Yeah.
So that was Tuesday already. Let's see if indeed it held its momentum to the downside. Did it really? Did the markets really engage it? Let's go to hourly chart. Monday was the first. Monday was the first. This is the AMs, and we're getting to the London session. We can see Monday right through the whole day. Yeah, definitely was priced in. That data usually comes out South African time, I think 2:30 p.m. Let's just confirm quickly. What is the time here? JOLTS jobs opening. I like 4 p.m. Okay. 4 p.m. Let's see. Where's our chart? 4 p.m. 4 p.m. On 1 hour. 4 p.m. is 3. Could have been here between these two candlesticks, but definitely priced in. A bearish day on GBP USD. Today we have, oh no, I like, before we go to today, let's look at the ISM. So this is manufacturing. ISM is the Institute of Supply Management. This is a highly regarded, important piece of data that we get. So they do it for manufacturing and for services, right? The Institute of Supply Management. I want us, many of you don't click on the latest release. Let's click on it, right? Now with manufacturing and services, let's go back to the calendar quickly, right? This is what I wanted to show you, sorry. Above 50 indicates industry expansion. Below indicates contraction, right? Anything above 50, it's okay. That sector is all right. It's within expansion territory. Below it, it's slowing down. That sector is slowing down, right? So previously 47.2, there was a prediction, an upwardly prediction to 47.6, but that wasn't met. 47.2, easy, you would sell the dollar, right? Sell the dollar, buy gold, right? So let's click, we clicked on it already. Here it is, ISM Institute of Supply Management. The ISM report on business manufacturing PMI and services PMI are two of the most reliable economic indicators available for providing guidance to supply management professionals, economists, analysts, and government and business leaders. The reports are issued by the ISM Manufacturing and Services Business Survey Panel. The ISM report on business continues to be consistent and accurate in indicating the direction of the overall economy. In addition to the manufacturing and services sectors, or in addition to the manufacturing and services sectors, the reports are available on the first and third business day of each month. Right? We got this one on the first day. The third day, we're going to get services, basically. We're going to get services PMI, right? Let's look at what we've gotten so far. Click on report. And for the sake of time, I won't read the entire report, right? We'll just cover the headlines. New orders and backlogs are contracting. Production and employment is raw materials inventories contracting. Customers' inventories about right. Prices decreasing, exports and imports contracting. So the manufacturing sector is definitely slowing down, right? Economic activity in the manufacturing sector contracted in September for the 6th consecutive month and the 22nd time in the last 23 months, says the nation's supply executives in the latest manufacturing ISM. The report was issued today by Timothy R. Don't know how you say his surname. I won't attempt to butcher it. Let me just get Sihle in. Okay. This is the chair of the Institute of Supply Management for Manufacturing Business Survey Committee. The manufacturing PMI registered 47.2% in September, matching the figure recorded in August. The overall economy continued in expansion for the 53rd month after the 1-month contraction in April 2020. A manufacturing PMI above 42.5% over a period of time generally indicates an expansion for the overall economy. The new orders index remained in contraction territory, registering 46.1%, 1.5 percentage points higher than the 44.6% recorded in August. Now, like I said, I won't read all of it, but this is how can I put it, a very important report. Now, what I want to do is just swiftly go to this chart here, which will break down everything much quicker for us, right? We can see the trend. It says contracting for the last 6 months. New orders, those have slightly gone up. The previous month, August, was 44.6, is now 46.1. That's a 1.5 percentage points, but it's still contracting. The rate of change is slower, 6 months. What I'm most interested in, honestly, is this one here. employment, right? So employment moved from last month 46% to 43.9. That's 2.1 less. It's contracting and it's moving faster, right? And that trend to the downside has been there for the last 4 months. So that's quite telling for me, right? So we've got a loss of jobs, I guess, under the manufacturing sector. So this type of data, I guess, is contradictory on the day, right? Where we have jobs opening, right, as an increase, but we actually also have a decline in the manufacturing sector. Now, this is very simple. If you don't trade, you don't lose money, right? So what I'm saying basically is don't feel compelled to engage the data, especially when it's high impact data, but it's contradicting. This is where you're going to see the true battle of the bulls and bears play out. It's not worth you being a part of it. It's not your war to fight. Is that clear?
I'm sorry. Sorry, I have a question.
Yeah.
Yeah, a lot of
Yes. When you were reading the data, if you can go back to the manufacturing data.
I'm struggling to hear you there.
Can you hear me?
Yeah, much better.
Okay, so when you were reading the data, if you can go back to the manufacturing data, there was something there that they said, if you can go back a little bit up.
Up here.
Yeah.
Yeah, I think we're here.
Yes, so they were saying that the manufacturing registered 47.2% in October, matching the figure recorded in August. The overall economy continued in expansion for the third month after 1 month.
I just want to see where you are. Manufacturing as this year, right?
Yeah, sure.
Registered 47.2% in September, matching the figure recorded in August. The overall, what did they say? The overall economy continued in expansion for the third month after 1 month of contraction in April 2020. Continue, say with the question.
Yes, and then he said the manufacturing PMI above 42.5% over a period of time generally indicate an expansion of the overall economy. And here registered 42.2, and then they are saying above 42.5 indicate expansion.
That's rather very, how can I put it? Rather very weird to say that anything above 42.5% would generally indicates an expansion. No, that for me, unless they're working with a sample of the last 53 months, right? But the global industry standard is 50, right? So that wouldn't be an expansion for me. Anything above 42. So, no. I totally disagree.
Okay, so does it? So
totally.
does it mean the 53 months, they just find the median between that?
Yes, you're following what I'm saying, the logic behind it. Perhaps their sample is over the 53 months and that has played, the medium has been 42.5%. That's not, yeah, I think that's the only reasonable explanation I could come up with. But 50%, you can look at any economy, right? Euro, CAD, anybody, when they speak of their manufacturing and services, it's the same figure, which is 50. 50%, you're in expansion territory, right? Below that, you're in contraction territory. So what I suspect is in the last 53 months, we've averaged probably 42.5% out of the US manufacturing sector. Hard to say. I think I need to do a little bit digging on this one because it's rather bizarre for me to say that is expansion when we're below 50. Right? So that data, guys, overall, and if you can look at the calendar here as well, 47.2, it's in the red. Right? So that's nothing to celebrate. This is, yeah, worth celebrating. So now how do you engage the data? How do you engage your charts with that data? Do you buy, do you sell? Somebody's going to be somebody's going to be buying, somebody's going to be selling. You rather sit it out. Right? You sit it out because this is where we tend to get a lot of volatility in the market. Right? Let this data pass. Let what I normally say, let the hour pass. Then engage your chart purely based on the technical picture, the price action. Engage it purely based on that. Right? Okay. So our main focus here is the employment data leading up to NFP. So we've got jobs opening, which is data that a lot of people look at. There has been a rebound. Sure, that's okay. We've noted it, right? Today, ADP, non-farm employment change, that too has rebounded. From 103, it was revised. Let's see. Revised higher as well from 99,000 to 103. Now, this month, or for the month rather of September, 143,000 jobs. Once again, we can look at it this way. Let's go to the calendar, ADP. ADP, here we go. Oops. What happened to ADP now? I can't see it now. Okay, ADP. Right? And it will break it down as well. Right? So there's our rebound. So it seems this month, there has definitely overall been a rebound. So somebody out there with just these two data sets, right, are formulating a fundamental bias on the dollar. We've got ADP and jobs opening, rebounding. Now, how did NFP play out last month? Does anybody remember how it played out?
No.
I think it was in favor of dollar, but it did opposite. Yeah.
Let's go quickly look at it. If I believe you are right on that one. I think you are right. Last month. Did I say last month? Yeah, last month. Last month. I mean, yeah, okay.
Yeah, it was lower than the first, but was higher than the previous one.
No, I'm going about it the wrong way. Ne? I'm supposed to be on
September 6th.
not this one. Supposed to be in
First week of
September
September.
6th.
exactly here. I'm supposed to go up. Here we go. All right, so this is September. We're looking at it from the first week. This Friday. This Friday. Here we go. Right, so let's see. Average hourly earnings that pushed up, positive for the dollar. Non-farm employment change, 142 from 89,000. That definitely was a push to the upside. Now, it's red because it didn't meet the expectation of 164. But guys, we must compare apples with apples. 142 from 89 is a jump up, right? So, and an unemployment decline, 4.3 to 4.2. Honestly, oh yeah, now it's all coming back to me very well. I did say to a lot of the traders that it shouldn't be confusing. It shouldn't be. Let's go back. Average hourly earnings, 0.2 to 0.4. They're earning more. From 89,000 jobs created in the previous month to 142,000. Is it not an increase? It's an increase. Or am I reading it wrong? It's an increase. Which number is bigger here? It's 142 compared to 89. Yes, it wasn't 164 as predicted. But a prediction is just that. It's a prediction. At the end of the day, there were jobs created. And to top it all off, unemployment went down from 4.3 to 4.2. This is all positive for the dollar. That is all positive for the dollar.
I have a question.
And I remember very vividly now, we sold gold. We sold gold 25.30. Oh, I hope my mindset is not failing me here. 25.30, but I'm quite good with prices. Not to blow my own horn, but 25.30. 25.30, here you are. When was NFP? What's the date? Let's look at it one more time. The date here is the 6th September. Let's go see the 6th of September. 6th September. August. 6th September. Here we go. Just love trading. Hey, I love trading. There it is. That's where the sale came in. We sold it on the day. I remember sitting with my niece. Yeah. He was over. He came over to the house for the weekend. And he was saying he's expecting gold to break out of this 25.30. They set a new high and settle above it for leading up to the close of the week. But I said to him, hey, be careful, because in the previous NFP as well, we were 24.78, 24.78, between 24.70. I sold it again, the previous NFP, right? Now the previous NFP though, right? Not the September one, but the August one. That data was negative for the dollar. And it suggested, of course, gold should push higher. But the market wasn't willing to push it higher. And so we were at record highs. And I said, don't be surprised if it sells off.
Thank you.
Now I'm trying to find it. August when it is starting. August 2nd. Is it 24?
I beg your pardon? Back then, I traded GPS that day too.
Oh, you traded on that day as well. This is where we were. We were right here. And that's exactly, as you can see, there's the first Friday. We sold as well. Sold. Exactly the same thing. We sold. Now, yeah, we violated. We haven't really done a significant retest, but that's a story for another day. Now, we are not exactly at those all-time highs. We haven't really bounced off multiple times at this point. But with the data that we have currently, that is suggesting that what? Just looking at jobs opening and ADP, that's positive. No, sorry, what am I doing? That is positive for the dollar. Somebody who wants to front run this move, you are likely tilted more towards a bullish dollar. You follow?
Yeah.
All right? You're tilted towards a bullish dollar. So, where is that? 1st October, 2nd October, 1st October, jobs opening positive, ADP positive tomorrow, which is Thursday. You're going to get your weekly unemployment claims. There it is. Unemployment claims, 218 the previous week, last week, and they're saying 221. So they're expecting what? More people to claim for unemployment checks. If that comes out to be true, that will impact the dollar negatively. This is where the confusion may come in, okay? But it's just a suspicion. I've seen it improve, I think, in the last couple of weeks, if I'm not wrong. Maybe I'm confusing it with the UK's one. Last week and this week are pretty much the same. No, I think I was confusing it with a different country there. Now, it could, well, for somebody who's already in those buys, dollar buys, right? Of course, if that data comes out less, in other words, where is it again? Anything less than 221 and definitely less than 218. So let's say 217, hypothetically speaking, 217. Where's my pen? Pen. All ringing at the same time. Sorry. 217,000 jobs created. It's a decline in people claiming for unemployment checks, which is a good thing for the US economy, right? And if that's the case, then we will definitely see a continuation of bulls on the dollar index. I don't want you to rush into this trade yet. Let us wait for the data to come in tomorrow. Now, yes, it's important, but the most important one actually is this one here. It is this one here. That's the one that's quite important. Why is it important, you may ask? The services sector out of the US economy contributes 70+% to GDP. So we're very, very, very glued up on this one. Previous 51.5, and if I remember well, this was an incline actually from the previous month. It went up from the previous month. 51.5, the previous one was 49. We had just gone into a contraction territory, then we got out of it. So this is August, this is September. A lie. No, this is August. What is this? July, August, September. July. Yeah, this is the one that I'm talking about. Sorry. Contraction. And August got kind of better. Now we're expecting 51.6, right? 51.6. Now, that's not the biggest thing that I'm looking at. What I'm more interested in, yes, I want to see the overall sector stay above 51.5. That's number one, right? If we get, let's say, 51.6, fantastic. That's great. We get 51. Anything further from this number and this one, even better. Say 51 point, I don't know, 7, 8, maybe even 52. That would be great. It indicates expansion. But the most important thing is you clicking here and coming to the latest release. What you want to study is that employment number. Are you following? The employment under the services sector. Has it increased or has it declined? It's going to be very telling, right? And I will engage, of course, this data, right? If I do get the time during the day, once this data comes out, I will send out something to give an idea of how it's going to play out and what type of trade we want to be in. If for anybody who wants to be in that NFP before the data actually comes out to the following day, Friday. That will be telling for us the ISM services employment. That's what we want to look at. Then we'll know if GU will continue to the downside, EU to the downside, is DJPY to the downside. Gold bulls might play out. That will be an easy one, especially with gold, because gold, not only because of a weakening, no, that gold one, let's leave it, because now gold, we've got those geopolitical events. So let's rather focus on GU and EU, right? I think that will be, and let me not confuse you, GU and EU, right? So if indeed under services employment is strong, that's a strong dollar. So GU sell, EU sell. Those are the type of trades tomorrow evening we're likely going to enter, or by the time we actually meet tomorrow evening, I would have likely maybe sent out that trade plan and have executed those trades leading into NFP. Now, NFP may came out. Let's look at how what the economists are saying about it. So Previously 0.4, they're saying it's going to come down to 0.3. Previously 142, they're seeing an increase on that one. Jobs created and unemployment staying the same. Well, that's quite neutral, I guess, on this one. This one doesn't matter too much to me for now. The noise is usually made here and here. So if we can get a positive number here, indeed 144 jobs created or even more, that's positive for the dollar. This thing unchanged, still positive for the dollar. It's stable. Does that make sense?
Yeah.
Yep.
Yeah.
Okay.
But what if it goes down?
You wanted to go down.
Yeah,
If
what
it
if
goes down,
if
fantastic. Even better for the dollar. This is where we're going to see an overreaction in the market. That's where you get to see that spike that everybody likes to see, because the data has come out even better than what was predicted. Whenever we get that, of course, whenever we get data that comes out even better than the prediction, that's where you get that overreaction. That's where you get to see that 200 pip movement of a single candlestick, or sometimes slightly even more.
It's been long we have those in the market.
I beg your pardon?
I said it's been long we have those in the market.
Here's the thing about NFP. It's not the biggest, for me, it's not, a lot of traders make a lot of noise about it, but it's not, yeah, for me, it doesn't, how can I
We
put it?
have so
All right, I
much.
think I've even shared it before on our Forex MG Telegram page. I think I did it this past NFP. There was a trade that we front ran, and let me just quickly find it. Because we were already 700 pips already in, and come NFP, the move is so irrelevant to anybody who's been front running it. And when you're not in a trade, come NFP, all you do is expose yourself to risk, hoping to, because honestly, you're not going to go in at 0.01. Now, all the gains that you've made for the entire month or for the entire week, you're putting it at risk for this 1 day event called NFP. Honestly, it's not worth it at all. It is not. And so I always tell traders that you're not missing out on anything. You're not. Does that make sense? You're not missing out on anything come NFP. Sitting on your hands is likely the best decision you'll make for yourself than wanting to engage that data and blowing your account. It's a pity I can't find it. But I'll share it with you. I'll take a screenshot of it once I find it. Right. I made a comparison of how NFP looks like and what the type of trade that we were already in. I'll share that with you so you can see, right? The type of trades that we want to be in. It's you want to entertain quality trades and not go with the noise. The noise will always kill you, honestly. Our so-called gurus who always share the blues, they're making noise. That's what's killing. That's what's killing you, right? So I always say, if you don't trade, you don't lose money. What's going to give you longevity in this is capital preservation as a first thought. Whenever you open that chart, you're always thinking about capital preservation and not profits, because profits are a given. Once you open your chart, of course you intend to make profit, right? But those who do best at this thing is those who spend more time thinking about the risk involved in trading, right? I think I'll leave it here. I'll leave it here. Are there any other questions?
Yes, talking about quality trading.
Yeah.
Um, our strategy for entering, is it just only role reversal we use? Because I think that's the only thing we mentioned that I can think
Mm-hmm.
of so far.
That is my mantra. That is my go-to. I'm not going to take away, of course, from what you call this other methods that you may be incorporating. Your I see, what is that? ICT, I think it's called, um, which basically comes from the Wyckoff, method. There are many methods, right? But I'll always keep it simple. Top-down analysis. Let's identify that structure. Let's identify those levels, and we look for our entry. You
Oh,
want to keep your approach simplified. You're going to enjoy your trading much better, right? Now, it's not the only thing that we look at. I will share, of course, with you also our pivot points indicator. But for now, I want you to be able to train your eye to identify structure and to identify those turning points in the market. For example, we've got GBP, we've got key turning points in the market. Okay, and that's where we
yep,
are.
I have
Yes, I did say. It was Glorious FX who asked that, am I going to hold a sell? Was it on GBPUSD? I
thought
think
to
it was
allow you
on
to come down to this
GBPUSD.
point.
Oh, that trade yesterday. You
Uh,
just take profit, right? Yesterday.
beg your pardon, sorry, the line was breaking there.
Yesterday trade. You take profit already, right? GU.
GU. The question was, will I take profit or will I continue to hold those sales? Profit has been taken on GU.
It was already yesterday
Right?
now.
Profit has been taken on GU. We are in a bullish structure. The only time, there are two ways I can go about it. Either I'll, adjust my stop loss, continue to hold it. If I've got the fundamental factors to support a continuation to the downside, yeah, sure. Because simply violation role reversal. For anybody who's been bullish on this is where they want to come in with those buys on GU.
Yeah, and again,
Right?
on the
So my target for those sales to the downside has been reached. This is where I should be opting to be out of the market, right? But because of, let's say, front running NFP, the data would suggest that I should be holding on to my sales GU in anticipation of a positive NFP on Friday. Simply hold the trades. Let me see if I've got any other GU sales on another platform. Let me just check here on my side. And let me just check
that
here.
they could really come down to that point. That would be nice.
Yeah, because if it breaks that, fantastic, more profit for me. What I do is just on a daily basis adjust my stop loss and hold the trade. GU, yes, I still have those sales going. I still have those sales going. So I'll continue to hold. Just
Only
simply
thing that is
adjust those
making me
stop losses.
skeptical is on the monthly time frame. It's actually breaking out of a down trend.
Is there a particular level that you've identified?
And the monthly time frame is broken out of a trend.
Oh,
If you go to the monthly time
the
frame,
line is not good. The line is not good. It's making it difficult for me to hear you.
can you hear me now?
Yeah, can you hear you?
I saw the trend line on the monthly time frame. You discover that it's actually breaking out already into a bullish momentum.
Yes, and I think that's something that I should did some time back. Did you start your trend much higher?
Yeah, it touches.
Let's just
Exactly down.
Let's just. I would say would have broken
Yes, we're broken out already.
Right.
Exactly. Yeah.
Sure. Given we are definitely bullish, right? That's the structure. But look at this on a monthly.
Yeah.
This was previously resistance we violated, but reversal still needs to happen one way or the other, I guess. Sooner or later, this
we'll
level
find
needs
out.
to be. Yeah, where's my tools now? Tools, where are you? What happened to this thing? Okay. We've got this point, we've got that point there. Right. We still need to likely come back, dip into it, and then right. So let's see. Let us see where it goes. Right. Let us see where it goes. A fantastic observation on that one. As you can see on the daily here, like I said, just move this up. Come on. Okay, this thing is just playing games now. Let me try one more time. There we go. Right. So I've got this fine. I've got my structure here in place. And then I've got the same structure. Resistance, failed to have momentum. Finally validated it one more time, still failed to close above it to continue expanding this bullish structure here. So let's see, as long as I'm below, it gives me some sort of level or some level of confidence to hold on to those cells. So I've got that stop loss that is not protecting capital, by the way. It's protecting capital and profits. So if I do get stopped out, it was worth it. I'm not leaving my stop loss above my entry. No, that has been adjusted to protect both capital and profit to make that trade worthwhile. Now, of course, should this trade work out as anticipated, we do actually have a rebound yet again on NFP, giving us a positive reaction on the dollar. GU will continue to sell. Ideally, of course, if anything, like I said, even on the monthly, you know, we're not to tap into some here, at least before we push higher.
Okay.
Now, does that make sense?
Yeah.
Yep. Lemon squeezy.
All righty. Lemon squeezy is yeah, no. Enough has been said for the day. So tomorrow, please try. Oops, I hope I didn't delete everything. Yeah, okay. Try and go through those statements, because I want to paint a picture for you on why so we can go and look at the other years. It will start to make sense why interest rates have been cut right now, because we haven't gotten to the target of 2%, but those interest rates are already being cut. So something is happening in the background. So I want to paint that picture to at least before the weekend. You need to have that type of information, right? Traders,
Yeah.
for today.
One thing about that, now you just mentioned it. Can you hear me?
Yeah, I can hear you loud and clear.
Okay. How many times do you like advise someone against it? Because personally, when I was going through it,
Yeah,
he was looking somewhat the same thing for me. So at the point, I got discouraged even reading it at all. Because when you
no,
start the same thing,
no, it's not. It might come across as the same thing. Yes, there are months where you're like, man, come on, this is Captain,
just a
right?
little
Yeah,
difference. One line, half a phrase, just something like that. Most
yes,
times.
you're right. There are months where they play it safe and it's almost cut and paste, right?
Yeah.
But
yeah.
The reason why I'm saying look at it from January to December, because there are differences. Some months, let's say January and February might come across to be the same thing. You're like, but then the wording does, they do make minor adjustments to those words, and because they don't want to cause any panic in the market, so they gradually change the wording, and that's quite significant for those who are paying attention to what the Fed is doing or saying, rather, right? Of course, the most obvious and significant change in the reports would be the decision to cut or hike interest rates. That you can't hide, you can't mask it, it's there, everybody can see it. But when there is no change, you want to be paying close attention to the wording. If there's no change in the interest rate, you want to pay more attention to the wording. That will hold.
Okay.
Yeah.
All
No?
I'll take it.
All righty. Ladies and gents, tomorrow, same time, same place. What do we say? Share this.
Share this. That.
Thank you very much, guys. Thank you very much. The engagement was much, much, much better today. Much appreciated.
Thank you, Mr. Lebo.
Thank you.
Actually, no, the meetings are not favoring me in a way.
I beg your pardon?
I said the meetings, they are not favoring me. I only talk on Wednesdays because that's the days I'm like at home. On Tuesdays, on Tuesdays and Thursdays, I'm usually like 1 hour in.
Oh, nice. Sorry about that.
Yeah, I already have the answers, so that's why I can't talk most times when you know.
Oh, no, now I understand. At least there's an explanation behind it.
Yeah.
No, thank you, Mr. Bruno and everybody. I'll see you tomorrow.
Yeah, you too. Take care.
Okay.
Right.